Ah yes, the Amazon, a growing behemoth that has created its own ecosystem where inhabitants can thrive freely without any exposure to the outside world. Oh wait, wrong Amazon, my bad y'all. I'm talking about the Amazon that we spend countless hours browsing for random stuff that we don't really need, but modern day Sith Lord Jeff Bezos forces us to the dark side every single time. Amazon has reinvented how society approaches retail, that's no secret. Through patience and cutthroat business practices, Amazon has been able to become a $1.6 trillion juggernaut. They've been able to do this by making their customer value proposition not so much a value proposition as it is an IQ test. You're telling me I get all this for only $10 a month? You'd be crazy not to hand them all your money, right? This can be reflected in the nearly exponential growth of Amazon Prime memberships throughout the past decade. In 2010, Amazon Prime had 3 million members. Fast forward to 2020, and Amazon has 150 million members and counting. So,
boom! 2 plus 2 is 4, minus 1, that's 3, quick maths.
Yes, Amazon is generating close to $18 billion alone from its Amazon Prime memberships. To put that in perspective, that is larger than the market cap of Zendesk, Domino's Pizza, and MGM Resorts. That is only a sliver of the revenue Amazon is generating though. Just in the fiscal year of 2019, Amazon saw huge revenue growth as they received $280 billion in revenue for the year. But what led Amazon from starting like this to the modern day titan of industry it is today? Well, at the core of Amazon's competencies as a company is two things: their vision and their mindset. Jeff Bezos had a vision for the company from the very beginning, being able to sell anything and everything. Additionally, Jeff Bezos was able to temper investor expectations by informing them that he does not expect Amazon to turn a profit anytime soon. Through this, Bezos was able to replace the demand for profits with the demand for vision and growth for Amazon investors. This strategy turned out to work for Amazon as they allowed economies of scale to decrease their cost structure and increase their market share. They turned a profit finally in the fourth quarter of 2001. While most firms are focused on the short-term appeasement of shareholders through promising quarterly earnings, Amazon was able to divert their capital into long-term investments to create moats around their business and further differentiate themselves. This in turn allowed additional cheap capital to flow into Amazon from observant investors, which allows Amazon to make additional investments into their long-term strategy. This cycle created a positive feedback loop that allowed Amazon to reach the height it is at today. As seen from the diversification of their revenue streams, Amazon is a master of monetization. However, above all, the unsung hero of Amazon's success is Amazon Web Services. As a tech company, Amazon had to host its own servers and data centers for its e-commerce platform to run smoothly. Any IT manager will tell you that this is one of the costliest expenses a tech company can incur. As Amazon continued to scale, this cost-intensive hardware was going to weigh down on their balance sheet. So what did Amazon do? They turned an expense into revenue. They leveraged the existing server and data infrastructure they had built throughout the years and they rented out that unused space to other companies, and thus the fundamentals of a booming industry of cloud computing was born. Fast forward to 2020, and now companies such as Netflix, Snapchat, Airbnb, Adobe, and so many more use Amazon Web Services to handle all of their back-end. What makes Amazon Web Services so special is its relative dominance over competitors like Microsoft Azure and Google Cloud, and its high operating margin of over 30%. Amazon Web Services is a profit driver that has allowed Amazon to continue to grow and make capital-intensive investments despite it already reaching economies of scale. Thanks to AWS, Amazon is able to subsidize the razor-thin margins it makes in e-commerce and continue to make those long-term investments into new industries ripe for disruption such as education and healthcare. So what can we learn from Amazon's success? Well, there are a few things. First, leverage economies of scale when you can. Being able to efficiently scale can decrease your cost structure long term, thereby increasing your competitive advantage. Secondly, have a monetization mindset. More specifically, think of a way to turn your expenses into revenues. Amazon took the costly expense of data and server infrastructure and turned it into a money-making machine. Look at the expenses as an opportunity, not a hindrance. Lastly, there are no futurists in foxholes. If you're constantly concerned with the short term, then you'll never be prepared for the long term. Do not get caught up with what the competition is doing and pave your own path that enables sustainable prosperity.